What's going on, ladies and gentlemen? I caught this earlier today on Fox Business. They had an interview here with Peter Schiff. I thought it was pretty interesting. I also recommend getting his new book if you're a a Schiff fan. It's really good. I'm about halfway through it, and it's a real eye opener. It doesn't just kind of spell out all the issues that we have going on around the world, but he actually gives some pretty good suggestions and solutions to some of the problems that we're going through and we're going to be going through in the future. So, highly recommend the book, whether you're a fan of his or not. I think it's just a good economic book. But here we go.
A lot of fear pouring around that market. David, I'll send it to you.
All right, thank you very much, Liz. Well, investors poured into treasuries today. Of course, that sent the rates falling to all-time lows as folks are trading in their euros for what they see as the safety of U.S. treasuries. But we have someone who says that bet could turn sour fast. Peter Schiff is the CEO and Chief Global Strategist at Euro Pacific Capital. Peter, good to see you.
Nice to see you.
So people are dumping their euros, I think correctly believing that Europe is in the middle of a big crisis and the euro is going to go down. They're buying into the dollar. Is that a mistake?
Yeah, I mean, they're jumping from the frying pan into the fire. Maybe they don't know it yet. It's like the people that bought Facebook, right? They were all excited about buying it, but once they discovered what they owned, they wanted to get out. I think the same thing is going to happen with the dollar.
How soon? How soon? Because we know the euro is facing a crisis right now.
Yeah.
How long before that happens to the dollar?
Well, I don't know. I mean, it's hard to know exactly when. I know there are problems in Europe, which is why we avoid the euro. I mean, Europe, the dollar isn't the only currency that has a fatal flaw. I just think that we're in worse shape. But right now, we're benefiting from what's going on. I mean, the best thing that the U.S. economy's got going for it right now is that people think Europe is in worse shape. I mean, you mentioned Treasury rates. Why do you think the 10-year is at 1.65? It's not because we're such a good credit risk or because we have no inflation. It's just because you've got this fear trade, people moving reflexively from the euro into what they perceive to be a safe haven. And so we're benefiting from Europe. Look at the price of gasoline now, or oil prices coming down. That's all because of problems in Europe. If it wasn't for that, oil prices would be going up. The bond prices would be falling.
But you said something very provocative, not surprising, coming from Peter Schiff, that we are in a worse situation, that our currency, the dollar, is in a worse situation than the euro. How so?
Sure. Well, you just mentioned, look, you just talked about Spain and the problems over there, and interest rates are up over like 7% in Spain. We have got a lot more debt relative to GDP than Spain does. I mean, we're in worse shape than Spain. I mean, we might not be in worse shape than Greece, but we're certainly in worse shape than Spain. But yet Spain is being held to account for all that debt, and we still get a pass. Imagine what the U.S. economy would look like right now if we had to pay the same interest rates as Spain. I mean, it'd be pandemonium here. We'd be in complete free fall.
So you think the dollar is going to collapse. How does that happen? Tell us how that would affect us directly.
Well, eventually, you're going to get some resolution to the European problems, right? One way or the other. And the focus is going to be back on us when the spotlight is off Europe. But we have enormous amounts of debt. I mean, we can't repay this money. The only reason that we can pretend that we can even service the debt is because interest rates are at zero. But if we have to pay a market rate of interest, a true rate of interest on our debt,
in order to sell our bonds,
we can't even service the existing bonds, let alone the new ones. I mean, what if interest rates went up near 7%? That would probably add close to $1 trillion a year to the interest on our debt, which would send the budget, which is close to $4 trillion a year, maybe up to $5 trillion.
So in the Schiff world, we're going to see a collapse of the U.S. dollar. How do we recover from a collapse in our currency?
Well, I mean, that's a big topic in my book. I got a book that just came out, The Real Crash. It came out.
Real threat.
Well, it's a threat too, but it's the real crash because the one that we already have wasn't it. Some people think we had the crash.
Okay, so how do we recover from a collapsed currency? Because that sounds like something would take generations.
I want to
recover
avoid
from
a complete collapse. I mean, I don't want the hyperinflation scenario to pan out. So I'm hoping that we avoid that. But we have to come to terms with the fact that we're broke. We're going to have to restructure our debt. I mean, we can't afford to pay back 100 cents on the dollar when interest rates go up. But we can't keep keeping interest rates artificially low to delay that because we need higher interest rates.
Finally, you do say that there are things that people should be buying right now. As bad as the situation, there are some bargains. What
Absolutely.
are they?
I got an investment conference going on 2 blocks away.
Tell us what people should be buying.
Well, we're investing abroad. We're investing in companies that are going to be catering to the emerging middle class.
Like what?
well, we're buying in energy names and mining, but in transportation. But I think that when the world stops buying treasuries and starts buying stuff, when they invest in their own economies instead of ours, I think you're going to see an explosion in consumption abroad. I think you're going to see appreciated foreign currencies enhancing the wages and the purchasing power of consumers, particularly in the emerging markets.
So anyway, he just that's basically the gist of the interview. I don't want to go too long here, but it's funny. You know, Spain is you know, they don't have a printing press, so now they're obligated to somehow deal with this. We just keep printing and printing, and as Schiff said, we're much worse off. But you know, you raise interest rates, the dollar will tank. So we're stuck in a pickle. Of course, we all know that, obviously. But anyway, I just wanted to put this on here for you guys for your viewing pleasure. Anyhow, we'll catch you on the next video. Have a great night, everyone. Take care.